some of us have just come back from Sibos in Osaka. You mentioned that one of the key themes was sort of partnering. I mean, what are the other sort of major takeaways that you picked up in Sibos?
I think the focus obviously was on Japan in particular, and there was a lot of focus on the so-called currency wars, which I think was a term coined by the Brazilian finance minister.
Yeah.
Which
Mr. Manteiga.
Correct. Which really is just symptomatic of the broader challenges facing the industry and kind of some of the macroeconomic issues that are out there. Whether it's the fact that we have, a lot of dollar liquidity that is an outgrowth of U.S. Domestic monetary policy, but that is impacting the world's economy. It is giving rise to more structural issues, if you will, between the world economy. So there was a lot of discussion about RMB, its role, its future, how fast it will grow, will it become a reserve currency at some point? There was a lot of discussion around how corporates in particular and how clients are navigating this space, where you have this huge amount of, as I say, dollar liquidity, but there are shortages of liquidity in some of the other currencies. And how do you deal with that as an FI as well as potentially as a corporate? Those were some of the big challenges. So not so much about liquidity, but the type of liquidity, where it's accessible and available, what currency is it in, how's it priced.
Yeah.
I sat on a couple of panels where this was the topic of discussion, and I think it's very interesting when you get economists and bankers and so forth talking about these issues. So the end result of that was essentially that you've got a number of economies that are still relatively closed in terms of either the openness of their current account or their capital account, versus, say, the US, which is probably still the most open economy in terms of international currency exchange.
Because Neil, you mentioned the renminbi, and the Sibos was in Asia, and clearly we've seen huge developments in the offshore renminbi market. And the temptation is always with economic projections, isn't it, is to sort of have a sort of upward sloping curve.
Well, it's interesting, Brian, because notwithstanding that China is now the world's second biggest economy, and by all predictions in due course time will be the world's largest economy. The analogy was made to Japan, and in its heyday, when Japan was growing much faster than the rest of the world's economy, was indeed the world's second largest economy. The Japanese currency never really gained traction as a global settlement currency, A, and B, never gained traction as a reserve currency, B. In fact, at its heyday, the yen never accounted for more than 10% of global world currency reserves as the world's second biggest economy. So if you look at where China is today, actually relatively speaking, the number of transactions that are physically being settled in RMB, which is what is feasible today on the trade side, is still relatively small. As a relative scale, which is to give you one example, there's more value and more transactions being settled in Polish zloty than there is in RMB. So the discussion is really all about the potential, because we understand the size and scale and ambition and potential of China.
Yeah.
And
it would depend on China's leaders wanting to release a lot of control over the economy, which also has, other political implications.
So it's very conceivable to see RMB becoming a more prevalent means of commercial exchange. Can we foresee a situation in the next 5 years where China's capital controls are lifted, where it becomes a fully convertible international currency with a rich, fully developed capital market? Probably not. Will there be parallel services, dim sum bonds and so on and so forth, that are available to international investors in RMB? Yes. Will that be a material market? Yes. Will it be relative in scale and size to some of the developed markets? Not in the short run.
Neil, on Sibos, again, I think on the regulations, what I picked up from people was that they all have deadlines now. And the deadlines are 2013 for Basel, 2014 for SEPA, and there really is no escape. Do you think there's a certain urgency that there wasn't perhaps 12 months, even 12 months ago?
Definitely, certainly amongst the FIs, but I would caution that that doesn't necessarily extend to companies that are also affected by the same legislation, or the same regulations. And I think the constraint there is as much as anything the availability of specialist expertise, resource, to some degree budgets, to simply execute what are in many cases very, very significant, substantial change programs for large companies. If you take any of the industries that are heavily dependent, in the case of SEPA, for example, on direct debits, and anybody who is running a multi-ERP'd back-end platform, this is a major structural change to how they run and operate their business. So the sheer scale of that, the availability of specialist resource to do it, most of the good or better vendors and people and resources are already tied up. And so, there is an expectation that some of these deadlines possibly will be missed.
Okay. Mike, is that your feeling too, that some of the deadlines on the regulatory side are unworkable?
No, I think that this has been coming for a long time. I think most businesses who are living and breathing payments are well and truly aware of what's going on with SEPA, with Basel, with Dodd-Frank, and planning and living and breathing the regulatory changes. So, it's been no surprise to us, and we're certainly fully geared up for the changes. But as you say, people who are in the corporate space, I think, haven't seen the same kind of movements and the same kind of recognition of the change, and also of the opportunity, because I think there's potentially a lot of opportunity coming out of the changes for the corporate space specifically. I don't see a lot of value coming out of SEPA for the consumer. That's the one. That's, for me, that's the big thing. I don't think the consumer really wants what SEPA offers, to be honest, yet. I think it's a.
Okay. Well, maybe this tunes to your point, which is that a lot of the regulation is not for the consumer. But you certainly couldn't say SEPA was for the industry, could you? The banks have fought it tooth and nail.
And if you look at the kind of margin compression that will result from SEPA, it's radical. I mean, it is very, very significant. So our thinking is that this is actually going to polarize the payments industry, that you will get potentially a consolidation of institutions who are willing and prepared to invest and acquire the scale and build a bigger business. Conversely, you will get people who become niche players, but there is no room for anyone in the middle. So what does that do for the structure of the industry in terms of the competitive dynamics? You end up with
So you have a very efficient core processing capability, and with a low cost structure, but no innovation.
But potentially dominated by, let's say 5 financial institutions or 6.
But you have a regulatory headache as well, don't you? Because you get back to the whole process of too big to fail and GCFEs and all the rest of it.
It potentially accentuates those issues. Yes.
Neil, isn't there a worry that some parts of the traditional banking business, by dint of the regulations, just become unviable and nobody does them? I'm thinking about, and they can be quite fundamental things. So I'm thinking about project finance, infrastructure finance, things that take a lot of long-term financing that are very risky, and the major banks say, well, hang on, it's not a very attractive business anymore.
Definitely, that is a key risk, a key issue, and certainly one of the other sort of polarization scenarios we see is companies that are liquid, have access to the capital markets, are not reliant particularly on banks for running and funding their business, versus those that are not. And the competitive impact now of being in Camp A versus Camp B is quite extreme. because of certain financing vehicles either being uneconomic from a financial institution perspective, or the cost of access being that much higher, or indeed in some cases just not available. And so there's a real premium now on having that liquidity question solved if you are a large company, and you might also extrapolate from that certain industry consolidation scenarios where weaker players will potentially become vulnerable to stronger players because of the differences in their financial profile. We have essentially a number of strategic tests that we work through systematically to look at exactly where we take the business and where we are active and where we're not active. And the first and most important one, at least from my perspective, is listening to your customers and being customer-led and being very, very clear about what they value and designing your business around that. Second one for us is you need to be, as I mentioned earlier, a player. You need to be in the top 3 ideally, if not top 5, or have a strategic path to get there because of the economics of the way the business works. And as a bank, you need to be self-funded. You need to be able to deliver through cycle competitive returns and commensurate with the industry and so forth. Once you filter what you're doing through those various lenses, it becomes very clear what you need to focus on. And I think our bank has made some very tough decisions about businesses that we will or have indeed historically exited, where it was very clear they either didn't meet those strategic tests or we were not going to be best in class or able to compete with our peer group. And I think that now will become fundamental for every institution to be doing that.
Okay, Mike Jones from PayPal, let's give you the last word.
Thank you.
You obviously saw an area where you could extract value, but you're not. I mean, you still have to keep continuing to find new sources of value in the industry, and also to some extent you depend on the banks being a utility model to back you up. I mean, are you ever worried with all the regulation that's going on and all the restrictions on banks that they might not be there to perform that function?
Well, I think that's a really good question, actually. The first point to that is yes, we have innovated and developed and evolved, but based on doing something that wasn't being done before. So it's an incremental business that we've driven. This e-commerce spending and activity wasn't possible. So PayPal's existence is driving incremental volume. And we still get case studies from our customers where they say we turn on PayPal and hey, we get 10% more volume. We turn it off, that volume disappears. So we know you're driving incremental volume for us as a retailer. So that's it's a great validation. And we have to continue to add value and make people want to continue to use PayPal, or it won't exist for us in the future. We have to evolve, we have to innovate and continue that innovation. And it's about making life easier and better for our customers, which is listening to the customer, trying to anticipate their need. And we know the mobile is going to be super important for us going forward. We've doing, I think it was, last year it was about $4 billion was processed through the mobile. And this year we're expecting it to be closer to 10 billion. That's massive. It's becoming a significant proportion of our total volume. And that's just one of the other channels. There's going to be other channels too. It's going to be a true multi-channel environment. And then how do you make sure that you're able to add value to the customer who's starting to use you in the multi-channel environments where you want to offer them incremental value, you want to offer the retailer incremental value, you want to be able to make it possible for someone to get loyalty, redeem that loyalty, return goods, and get just a seamless user experience to move their money in ways they want to, both the business and the consumer. So we've got a lot of great ideas on these kinds of things, and there's a lot of work being done. But it's not a static situation, as we said before. It's a changing world. Will PayPal be the one wallet to rule them all? I doubt it. I'm sure there'll be other payments vehicles in the world in the future, but we'll certainly be, at the moment, I think we're the global leading wallet, and we anticipate staying in that place.
Okay, well, on the optimistic note for PayPal at least, let's end the discussion. Thanks to an excellent panel. We've been trying to make payments simple. This was the Bankers Leadership Series in association with Royal Bank of Scotland. My name is Brian Kaplan. I'm editor of The Banker.